You were listening to chartingwealth.com for Wednesday, the 22nd of July, 2015. Let's look at what's happening in the market. This is the total market IYY. We always start with the exchange traded fund IYY because it is a total market fund. And we're able to see what the entire market is up to for the day and over the last many days. Starting back on the 13th of July, the market started going up and it rocketed up pretty significantly. Over the last day, we're talking about Tuesday, the 21st of July, the market started making some down moves. Now, we are still officially in an uptrend, having crossed over going up on the MACD. Right on the 15th, that candle right around the 15th. And again, the first chart we always look at is IYY, and it is the 2-day chart. That is our big chart. It is a big wave. The market moves in waves. We always talk about that. And this is the big wave that we look at. Once a week, we look at the weekly chart. That's only once a week, and that's on our Monday week review. But this is our daily review. And what do we see happening today? Well, on this last 2-day candle, that is the 2-day candle for the 21st Tuesday, we can see a red down candle. Now, what is significant about this candle? It's not outside the Bollinger Band, so it's not totally what we would call a tweezer top. We love tweezer tops when they go outside the Bollinger Band on the green up candle, and then a red candle that goes down at the same level as the green candle went up. But we do have a tweezer top here. We have the movement in the candle, and again, we don't have it officially until it actually closes out. That is, the candle closes out and a new candle is generated. We're not there yet. But it is significant whenever the market stops moving in a certain direction and turns over at that same number. And we see that occurring today, the way that this candle has currently played out. But it is not closed, a new candle's not been generated yet, but it is significant to see. The market overall was down officially 0.46% today. The candle itself is a red candle for this 2-day period down. The derivative oscillator continued to move up significantly because there was up movement before the candle got pushed down, and it did go up higher than the prior green candle. There is a wick on top of this candle. And again, remember, when you're using Japanese candlesticks, which are my favorite kind of price movement indicators to watch to be able to show you what's happening with price, the nice thing about those is they do generate wicks above and below at times. So this above wick shows how much the bulls were able to push the chart up, the dollar amount up, and then how much the bears were able to drag it way down, which shows you that a lot of the momentum has switched over to the bears, at least on this 2-day candle. Now, let's drop back to our 4-hour chart and see what we see. We see a significant downturn. Now, if you remember, we talked over the last several days starting, we looked all the way back to about the 16th or so, and in the afternoon, and we saw, of course, that the market appeared to be topping off. It really didn't go much above about 107.20. It was a figure we called out. That was where the market pretty much topped out on the 16th, 17th. Didn't go above that on the 18th. Didn't go above that on the 20th. And then, of course, the 21st, it started moving down. Now, we're still above the 2-day trend line on the up move. We don't have a crossover yet going down on the 4-hour chart, but what are we looking to have happen? Well, we never found a place to be able to buy in on all of this up move, so we are waiting to see if the chart's going to roll over on the 4-hour chart and then possibly move back over going up. If it does, we're already in an uptrend on the 2-day chart, and as long as the 2-day chart stays in an uptrend, we will hope to find a buy-in point if the market indeed does that. It may not go back up again. It may go down. We're going to watch. We're going to make sure that when we do go to buy in, and again on a virtual trade, because we're not a stock calling service, we're not telling you to trade real money. We talk about virtual trades, but for you to practice, we want to see this market turn back around and go back up. And if indeed it does, and we get a nice trigger on the 4-hour chart, if it turns back around and moves up, then we would have a potential buy-in point if we're looking to buy some type of ETF such as IYY, an exchange-traded fund that tracks the total market. Now let's revert back to our 2-day chart, and we're going to see the 2-day chart on the S&P 500. It is a bit different. It is actually a green candle at this point. Again, topping off about the same as it did yesterday. Well, I'm sorry, back on the 17th, Friday. So we see that, of course, what we have on the 21st with this candle is an up move. It is still a green candle. If we back ourselves out, and again, why is the S&P 500 different than the total market? Well, the total market's all the stocks. The S&P 500 represents actually 500 large companies. So let's take a look at what happened there. We see the market continued to move up and then rolled over some today. On the 4-hour chart, we see 2 red candles for today. When I say today, I'm talking Tuesday the 21st going into Wednesday the 22nd of July. And we see that the MACD is converging. The MACD itself and the signal line still don't have a crossover going down yet. We do have the derivative oscillator losing a lot of its speed. So we'll look for potentially the same thing to occur in SPY. So keep your eye out. Watch what's actually going on in SPY. Might have the setup for a down move, and then it might trigger another up move, and we may be able to get into an up move on the SPY. So we are still officially up on both the IYY and the SPY. We do have some down movement, however, on the 4-hour, the half-day chart on both of them. Now let's range out and go to my favorite chart, which is the Qs. Incidentally, SPY was down 0.39% today. The Qs, which represents the NASDAQ 100, was officially down 0.06%. Now we have a green candle for today. What does that mean? Well, we're looking at a 2-day candle, not a 1-day candle. So even though there was a down movement officially today, it is not reflected in our green candle. It represents 2 days worth of movement. And what do we see? Well, we see a 2-day trend line. We see again, we have the chart moving out. We have the candle moving way outside the Bollinger Band. These are volatility bands. On our chart, the Bollinger Bands are represented by a blue dash lines. And of course, the inside area of the Bollinger Bands is a light blue area, a translucent blue area. We are way outside that on the candle with a strong up move on the Qs. Let's drop back and see what the 4-hour chart looks like. And again, the Qs appears to be topping off. 2 red candles for Tuesday. We had a green candle that ended the day. The Qs is below that. And that is why we have officially the Qs is down 0.06%, a little over 0.5%. We don't have near the converging of the MACD and the signal line that we saw on the S&P 500 and the IYY, the total market. And also we have a little bit of losing of steam on the derivative oscillator, but nothing like we saw on those other charts. So again, continue to watch the Qs, see if it's losing steam, if it's going to roll over and go down on the 4-hour chart, or if we're going to have a surge up tomorrow, that is Wednesday, the 22nd of July. Keep an eye out for that as you watch the charts. Now, let's go back to our 2-day chart, and what are we going to see today? Well, look at gold. Gold is continuing to power down even more. If you've been paying attention to our calls on gold, once it crossed over going down on the 23rd, you have seen it continue to move down, down, down. If you were an inverse gold fund, of course, you were very happy with these down moves from somewhere in the neighborhood of about, what is that? We're looking on the 23rd, somewhere in the neighborhood of about 114, all the way down today of 105, the low today was 105.25. So continue to watch gold for down moves. Let's take a look at what the 4-hour chart's doing. Again, just continued down movement. Although do pay attention, is gold bottoming out? Could be. It ended up closing today about where the low was on the 20th, the big surge down move. So pay attention to that. See if gold has has managed to get all of its losses out of it, and maybe it'll be turning around. We don't know. Officially, gold is still in down moves on the 4-hour chart, on the 2-day chart, as the opposite has occurred on SPY, the Qs, and IYY. Those are all in confirmed up moves, but keep your eye closely tuned to what's going on, particularly in the total market and SPY, for maybe a little bleed off and perhaps the possibility of getting into an up trade if the market starts to surge up again. Thank you so much for listening to us at chartingwealth.com. Please be sure to follow us on Facebook and Twitter and on Instagram now. Thank you so much for listening. You can always sign up for a newsletter at chartingwealth.com. We're happy to bring you these daily reviews every day, along with our trainings and other information, our weekly reviews that you get on Mondays. We appreciate you joining us from chartingwealth.com.